Friday morning, January 17th, 2026, 11:20 a.m. Eastern Standard Time. I'm sitting here watching the aftermath of what might be the most significant week in Federal Reserve history since Nixon took us off the gold standard in 1971. Gold closed the week at $4,896 per ounce. I'm a private commodities analyst. I've been stacking physical silver and trading these markets since 2014. I built this channel using this AI avatar for one reason: speed. Because I got tired of waiting half a day for mainstream media to catch up to what I was already seeing in real time on my terminal. And frankly, I got tired of watching all these other AI channels pump out fake news and recycled garbage about silver when what retail investors actually need is real information based on hard data. So here's where we stand today, 7 days into what I'm calling the Fed independence question. The DOJ investigation remains open. Powell has not resigned. Senators from both parties have voiced support for Fed independence. The White House is now publicly downplaying the probe, with advisor Kevin Hassett saying yesterday there will be nothing to see here. Treasury Secretary Scott Bessent indicated Powell's replacement announcement could come before or after the Davos trip. And in 4 days, on Wednesday, January 21st, the Supreme Court will hear oral arguments in a case that could determine whether the president has broader authority to remove Federal Reserve governors. That ruling could have major implications for how markets price institutional stability. Here's my primary claim, and I'm going to spend the next 30 minutes proving it to you with data, math, and real market mechanics. The DOJ probe into Powell has raised serious questions about Federal Reserve independence in the eyes of global markets. The initial uncertainty sent gold and silver to record highs. The political pushback has created a temporary stabilization. But the underlying question is not resolved. And the Supreme Court ruling on January 21st is the next catalyst that could move metals sharply in either direction. We are not just trading commodities right now, we are trading uncertainty about institutional stability. And if you think $4,596 gold and $89 silver represent the top of this move, you may not have fully considered what happens if the court expands executive authority over the Fed next week. I'm going to walk you through the complete timeline of the past 7 days. I'm going to run the historical comparison to the last time executive pressure was applied to the Fed in the early 1970s and what happened next. And I am going to show you exactly how I'm positioning my personal portfolio heading into Wednesday's Supreme Court arguments. Because here's the thing. If the court rules that the president can remove Fed governors for cause without significant judicial oversight, we could be looking at $5,000 gold by spring. We could be looking at $100 silver before the end of February. And we could be looking at a significant repricing of the dollar's role in global markets. Let me give you the snapshot. I pulled this data earlier today. Gold closed Friday's session at $4,196 bar. That's down about $31 from Monday's record high of $4,727, but still up nearly 70% from 1 year ago when gold was trading around $2,914. Silver closed at $89.22. Silver actually climbed higher through the week, hitting $89.56 yesterday before pulling back slightly today. The all-time high of around $91 was touched midweek. These prices are still extraordinary. Silver is up 189% from 1 year ago when it was trading at $80. Let me say that again. Silver has nearly tripled in 12 months. Gold has gained 70%. These are not normal returns. These are uncertainty-driven returns. The gold to silver ratio is sitting at about 51.5 right now. That's compressed significantly from where it was trading 6 months ago. When that ratio drops below 50, historically, it signals we're entering an accelerated silver accumulation phase. We're getting close. Now let me walk you through the timeline because the sequence of events this week tells you everything you need to know about what's driving these markets. Friday, January 10th, the Department of Justice serves the Federal Reserve with grand jury subpoenas. The investigation relates to Jerome Powell, his testimony before the Senate Banking Committee in June 2025 regarding the Federal Reserve's headquarters renovation project. The project's cost has grown from an initial estimate of $1.9 billion to $2.5 billion. In his testimony, Powell stated, "There's no new marble, no special elevators, no water features, no beehives, and no roof garden terraces." The DOJ is examining whether those statements were accurate. Sunday, January 11th. Powell releases a public video statement, an unusual move for a Fed chair. In that video, he states that the threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public rather than following the preferences of the president. Those are his exact words. He's framing the investigation as connected to broader tensions over monetary policy independence. Monday, January 13th. Markets react. Gold gaps up at the open and hits $4,720 during the session, a new all-time high. Silver spikes 7.3% to 85.75. Stock futures slide. The dollar index wobbles, but doesn't collapse. This is the tell. When gold and silver are exploding but the dollar isn't crashing, you're not watching an inflation trade. You're watching a liquidity panic. Money is fleeing into anything that feels safe. Tuesday, January 14th. Trump says he hopes to name a new Fed chair in the next few weeks. But here's where it gets interesting. Republican senators start pushing back on the investigation. Senator Tom Tillis writes on X that it is now the independence and credibility of the Department of Justice that are in question. Other Republicans on the Banking Committee express skepticism that Powell committed any crime. Wednesday, January 15th. The backlash intensifies. Multiple reports emerge that Senate Republicans are closing ranks around Powell, who has spent years building relationships in Congress. One former Fed advisor tells Fortune that Powell knows his way around Congress. The bipartisan support for Fed independence is stronger than the White House anticipated. Thursday, January 16th. The White House starts walking it back. Kevin Hassett, a senior White House economic advisor, tells reporters there will be nothing to see here regarding the Powell investigation. Treasury Secretary Scott Bessent says the probe is likely due to Powell's construction incompetence, trying to reframe it as an administrative issue rather than a political attack. Bessent also says Trump will announce Powell's replacement either before he leaves for Davos or when he returns. Friday, January 17th. Today, gold and silver pull back modestly on stronger economic data. The market is catching its breath, but the underlying tension has not been resolved. The investigation is still open. Powell has not resigned. And the Supreme Court hearing on Lisa Cook is 4 days away. So let me address the obvious question. What happened? Why did the White House back off? Here's my analysis. The political cost of attacking the Fed turned out to be higher than Trump anticipated. When Republican senators started publicly defending Powell and questioning the DOJ's credibility, the White House realized they had overplayed their hand. You can attack the Fed in tweets, you can complain about interest rates and rallies, but when you actually use the Justice Department to threaten criminal charges against the Fed chair, you cross a line that makes even your allies uncomfortable. The bond market doesn't like uncertainty about Fed independence. The stock market doesn't like it. Foreign central banks that hold trillions in dollar reserves don't like it. And Republican senators, who have to worry about the economic consequences of a Fed credibility crisis in their states, don't like it either. So the White House is now trying to have it both ways. Keep the investigation open as leverage, but publicly downplay it so the markets don't panic. The problem is, that's not how trust works. The damage to Fed credibility doesn't get undone because Kevin Hassett says nothing to see here. The market saw what happened. The market knows the DOJ served subpoenas. The market knows the threat of criminal indictment was made. And the market is now pricing in a permanent uncertainty premium on the dollar and dollar-denominated assets. That's why gold is still at 4,996, even after pulling back from the highs. That's why silver is still at $89. The crisis premium hasn't left. It's just stabilizing at a new, higher level. Now here's why next week is so important. On Wednesday, January 21st, the Supreme Court will hear oral arguments in Trump versus Cook. This is the case about whether President Trump can fire Federal Reserve Governor Lisa Cook. Last year, the administration accused Cook of mortgage fraud related to properties she acquired through federally supported housing programs. Trump tried to remove her. Courts blocked the removal. The case went to the Supreme Court. Here's why this matters more than the Powell investigation. If the court rules that the president can fire Fed governors for cause, and if for cause is interpreted loosely to mean basically whatever the president says is cause, then the independence of the entire Federal Reserve Board is gone. Not just Powell, every Fed governor, every member of the FOMC. They would all serve at the pleasure of the president. And once that precedent is set, every interest rate decision becomes a political calculation. Do I vote for the policy I think is right, or do I vote for what the president wants so I don't get fired? That's the end of Fed independence. And that's what's being decided next week. Harvard Law professor Daniel Tarullo explained it perfectly in an interview this week. He said the key question is whether the courts will apply the for cause standard with a requirement for establishing adequate facts through some process. If they don't, then in effective terms there will be no for cause protection. Instead, all the president will have to do is say, I find cause, you're out. That's what's at stake on Wednesday. The market knows this. That's why gold and silver are holding at elevated levels despite the pullback. Smart money is waiting to see what the court does. If the court rules for Cook, if they say the president cannot fire Fed governors without meaningful judicial review, that's a relief rally. Eventually, Burns caved. The Fed lowered rates. The economy got a short-term boost. Nixon won re-election in a landslide in 1972, and then the bill came due. The easy money policies of 1971 and 1972, combined with the oil shocks of 1973, created stagflation, high inflation, high unemployment, low growth, the worst of all worlds. It took a decade to fix. Paul Volcker had to raise interest rates to 20% in 1979 and 1980 to kill the inflation that started with Nixon pressuring the Fed. The unemployment rate hit 10.8%. Millions of people lost their jobs. Entire industries were devastated. That's the playbook. That's what happens when a president successfully controls the Fed. You get a short-term sugar high and a long-term disaster. And here's the scary part. We might be at the beginning of that cycle right now. Trump has been publicly demanding that the Fed lower interest rates. He's called for rates to go as low as 1%, a level that's only appropriate during severe economic crises. Powell has resisted. The Fed did lower rates 3 times in the second half of 2025. But they've signaled they're going to be more cautious in 2026 because inflation is still running about a full percentage point above the 2% target. Trump wants Powell gone. Powell's term as chair expires in May 2026, just 4 months from now. He could stay on as a Fed governor. His term doesn't expire until January 2028. But the question is whether he will. And here's where it gets complicated. According to PBS reporting this week, Trump's moves could actually make it more likely that Powell stays on the Fed's governing board after his term as chair ends. Why? Because if Powell resigns completely, Trump gets to appoint another Fed governor. But if Powell stays on as a regular governor, Trump can't add another loyalist to the board. Powell might stay specifically to prevent Trump from stacking the Fed with yes men. The White House knows this. That's part of why they're downplaying the investigation now. They've realized that threatening Powell might backfire by motivating him to stay and protect Fed independence from the inside. Now let me steelman the skeptics, because I know what the counter-arguments are. Skeptic argument number 1. The Supreme Court is going to rule for Cook. The precedent for Fed independence is too strong. The court isn't going to blow up the entire central banking system over a mortgage fraud allegation. Here's my rebuttal. I hope you're right. But this court has shown a willingness to overturn long-standing precedents when they conflict with this particular administration's priorities. And the fact that Trump has already tried to fire Cook, that the case has gone all the way to the Supreme Court, tells you that powerful people believe there's a real chance of winning. Don't underestimate the possibility of a ruling that changes everything. Skeptic argument number 2. Gold and silver are overextended. The RSI is above 70. This is a blow-off top. Smart money is selling into this rally. We're going back to $4,000 gold and $70 silver. Here's my rebuttal. Yes, the technical indicators are stretched, but this is not a technical rally. This is a fundamental repricing. When the structural foundation of the monetary system is under attack, technical indicators are meaningless. The market is not buying gold and silver because of a chart pattern. The market is buying gold and silver because the alternative, holding dollars, has become riskier than it was 2 weeks ago. And until that risk is resolved, the bid stays under metals. Skeptic argument number 3. The White House is backing off. Hassett said nothing to see here. The crisis is over. Time to take profits. Here's my rebuttal. The White House downplaying the investigation doesn't make the investigation go away. The subpoenas were served, the threat was made, the precedent is set. And even if this specific probe goes nowhere, the message has been sent to every future Fed chair. Cross the president, and we'll find something to investigate you for. That uncertainty is permanent, and uncertainty is rocket fuel for precious metals. Let me tell you what I'm watching over the next 7 days. First, obviously, the Supreme Court ruling. Oral arguments are Wednesday, January 21st. The actual ruling could come the same day on an emergency basis, or it could take weeks. But the tone of the oral arguments will tell us a lot about which way the justices are leaning. If they seem skeptical of Trump's arguments, that's bullish for risk assets and potentially bearish for gold in the short term. If they seem sympathetic to Trump's arguments, gold is going to rip. Second, any announcement about Powell's replacement. Besant said to expect an announcement before or after Davos. Davos is January 20th to 24th, so we could get a name as early as this weekend or as late as early February. If Trump nominates someone seen as a credible independent economist, that could calm markets. If he nominates a loyalist with no central banking experience, gold is going to explode. Third, Powell's response. If Powell announces he's staying on as a governor after his term as chair ends, that's a signal he's going to fight for Fed independence from the inside. If he announces he's leaving completely, that's capitulation. Fourth, the Fed meeting. It's scheduled for January 28th and 29th. The Fed is widely expected to hold rates steady, but the press conference after the meeting is going to be must-watch television. How Powell talks about the investigation, whether he addresses the Supreme Court case, what signals he sends about his future plans, all of that will move markets. So what am I doing with my own money? Let me give you my personal battle plan. This is not financial advice. This is just what I'm doing based on 12 years of watching these markets. I do not recommend you do what I do. You need to make your own decisions based on your own risk tolerance and your own research. Here are my triggers. Trigger number 1, I'm holding my core position through Wednesday's Supreme Court arguments. I'm not selling anything before we get clarity on Trump versus Cook. The risk of being out of the market if the court rules for Trump is too high. I can handle a 10% drawdown if the court rules for Cook. I cannot handle missing a 20% rip if the court rules for Trump. Trigger number 2. If the Supreme Court rules that the president can fire Fed governors for cause with minimal judicial review, I'm immediately adding to my precious metals position. I'm talking 20% of my liquid net worth into gold and silver within 48 hours of that ruling. Half physical, half mining equities. Because at that point, the game has fundamentally changed. Trigger number 3. If the court rules for Cook and protects Fed independence, I'm taking profits on 25% of my trading position. Not my core stack, but the leverage positions I've added over the past 2 months. I'll use those profits to buy back on any dip below 40,400 gold or $82 silver. Trigger number 4. If Powell announces he's resigning completely, not just as chair, but leaving the Fed entirely, I'm going all in. That would be capitulation. That would mean the DOJ pressure worked. And that would mean the next Fed chair will know that fighting the president leads to career destruction. The independence of the Fed would be over in practice, even if it still exists on paper. Now here's my risk management. If gold drops below $4,200, I'm cutting my leverage positions by half. I'm not trying to catch a falling knife. A drop below $4,200 would signal that the market thinks this crisis is going to be resolved peacefully and the Fed's independence will be preserved. I don't think that's likely, but if it happens, I'm not going to fight the tape. If silver drops below $75, same thing. I'm lightening up. I'll wait for a re-entry point. Here's one more layer of context because I think this is important. A lot of people are asking, even if the Fed loses its independence, why does that matter for gold and silver? Here's why. The US dollar is the global reserve currency. It's used for 60% of global trade settlement. It's held by central banks around the world as their primary reserve asset. Countries hold dollars because they trust that the US will manage its currency responsibly. They trust that the Federal Reserve will make decisions based on economic data rather than political pressure. They trust that inflation will be kept under control. If that trust breaks, if foreign central banks conclude that the Fed is just going to do whatever the president wants, they're going to diversify out of dollars. They're going to buy euros, yen, yuan, and gold. Especially gold, because gold is the only reserve asset that doesn't depend on trusting any government, and that diversification is already happening. The World Gold Council reported that central banks bought record amounts of gold in 2024 and 2025. China has been adding to its gold reserves every month. Russia converted a huge portion of its reserves to gold after the sanctions in 2022. Even traditionally dollar-friendly central banks in Europe and Asia are quietly increasing their gold allocations. They're watching what we're watching. They're seeing the independence of the Fed erode in real time. And they're protecting themselves. That's the macro backdrop. That's why gold is at $4,196 and silver is at $89. It's not inflation. Inflation is actually moderating. It's not interest rates. Rates are still relatively high. It's trust. Trust in the dollar. Trust in the institutions that manage the dollar. Trust in the political stability of the United States. When that trust cracks, gold goes up. When that trust shatters, gold goes vertical. And right now, we're somewhere in between cracking and shattering. The DOJ investigation cracked it. The political backlash prevented it from shattering. The Supreme Court ruling on Wednesday could push it one way or the other. So let me bring this all together. 1 week ago, the Department of Justice served the Federal Reserve with grand jury subpoenas threatening to criminally indict Jerome Powell.